Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Happy Friday to you guys. Today is Friday, July 13th. Yes, I said that. It is Friday the 13th. I hope you guys got some great upcoming plans. It's summertime. Hopefully, you guys are enjoying yourselves. Today, however, we got kind of a light day today. We just got one economic news to report today, and that is the consumer sentiment for the month of July. So, reporting in June was 98.2. Forecast for July was supposed to remain the same. It did drop a little bit down to 97.1. This is kind of a 6 month low, actually, so not like far out there or anything like that. It dropped a little bit, but but it's only like a 6 month low here. Go ahead here. Headline news: stock market is up a little bit today. It's not doing a great deal amount of trading today because we it's taking its cue more from Q2 earnings. It's just beginning the Q2 earnings reports. And today we had the banking sector, which came out kind of mixed reviews here. So it's not too hot, not too cold, kind of like the Goldilocks environment here, where we're just kind of like in the middle there, as it's kind of mixed. So let's kind of jump ahead here to the bond market. And the bond market's kind of fighting about this resistance here. We're starting to get kind of a bit of a stranglehold here with the 25-day moving average kind of rising a little bit. And we got the 100-day moving average here with a double layer with the Fibonacci. Is having a hard time fighting above it. We're currently up about 6 basis points, just right on that line right there. We may have I think we'll have a temporary jump up, maybe go up above it, but it'll probably be just temporarily because on the stochastic, it's starting to show a crossover, but it's just underneath the overbought position, so line. So since we're in kind of the medium range, it's an overbought and showing a trend reverse a little bit. Going upward, so it will probably help out bonds, but again, I think it'll be short term because pretty much we're going to end up in the overbought position, and it's just going to reverse again back downwards, back into a neutral, as we'll be in a overbought position here shortly. So in the temporary time period, I would kind of hold a little bit for possible rate improvement. You may get, again, we probably get to about this range like we've seen these a few times here. We'll probably get to about that way before it starts working its way down. So just be a little cautious here, but for the most part, if you got a little time, go ahead and float. If not, just go ahead and lock in now. But again, I think it's only going to be for maybe a day or two here, a temporary one, as it'll get pushed down to more the neutral area. Stochastic calendar or stochastic report there. Let's take a look here at the Treasury. Again, Treasury's kind of in the same range. We've been kind of in this range for about 3 weeks here, and it's below the 100-day moving average. It's below the 25, which is kind of now crossed the 100-day moving average, and we got this Fibonacci down here, which is way low. So again, we're down to about 2.83 range. So we've been kind of low to mid 2.8 range, kind of for a while now, as you can see, for probably about 2 weeks. We've been kind of hanging in that range. So giving a lot of ample room to mortgage-backed securities, which helps us out with maybe some rate improvements. Because if this goes down further, this will help rates. If this goes up, this will push rates higher, which will push mortgage-backed securities down, which will and thus give mortgage interest rates a little higher rate here. So in essence, rates are about the same. Again, we haven't had a lot of fluctuation of late with our interest rates. I do, again, continue to expect rates start climbing here in mortgage-backed securities as we see the Fed begin their downsizing of their portfolio of mortgage-backed securities and treasuries. And there hasn't been a huge appetite, so we get this extra supply in there, and that's just going to kind of gradually bring rates up a bit. Again, we went up from the beginning of the year. We've had 2 of those since we had 1 and 2 quarters. Now we're in the 3rd quarter, and we've already gone up about 0.5% from beginning of the year to June. And then I kind of project, if that continues, it'll probably be another 0.25%. We'll see here this quarter interest rates rise. All right, so just be cautious out there. You guys have a great weekend. Thanks so much for watching. I look forward to see you guys on Monday. Bye-bye.